Welcome to our podcast, where we dive into the fascinating world of cryptocurrency, exploring its impact on finance, technology, and the future of transactions. Arthur Hayes, the founder of BitMEX, has once again garnered attention by not only criticizing U.S. authorities' actions towards Binance and its CEO, Changpeng Zhao, calling them absurd, but also by offering insights into the global cryptocurrency market. Hayes, an influential figure in the crypto world, questioned the intentions behind targeting Binance, one of the world's largest cryptocurrency exchanges. Furthermore, Hayes suggested that the recent developments may lead to an increased flow of Chinese capital into Bitcoin. He attributed this potential shift to several factors, including the utilization of Hong Kong banks for international transactions and the existence of regulated crypto exchanges and brokers in the region. On top of this, Hayes, as former CEO of BitMEX, linked the positive impact on the crypto market to China's injection of credit into its economy. He contended that this move is boosting the overall value and adoption of cryptocurrencies. Thus, with his critique of U.S. authorities and his analysis of China's influence on the crypto markets, Hayes continues to be a bold and significant voice in the cryptocurrency sphere. In the latest developments on Jack Dorsey, the Twitter CEO and known cryptocurrency advocate, an intriguing progress relating to Bitcoin mining has been reported. Dorsey has made headlines yet again, this time through his investment in Ocean, a move driven by his aim to advance decentralization in Bitcoin mining. To boost the Ocean project further, Dorsey has personally invested and assumed a lead role in a funding round. This initiative is aimed at catalyzing the worldwide decentralization of Bitcoin mining. Ocean aspires to change the way Bitcoins are mined by shifting from the traditional centralized mining operations. Utilizing innovative technology and an ambitious approach, Ocean plans to distribute mining power among a network of individual mine workers to reduce the reliance on potent centralized bodies. By investing in Ocean, Dorsey signals his belief in the potential of decentralized systems to construct a more inclusive and resilient Bitcoin network. This is in line with his previous endeavors for the wider adoption of cryptocurrencies and blockchain technology. As a prominent figure in the tech industry, Dorsey's interaction in the Ocean project is bound to garner attention and spark additional interest in decentralized Bitcoin mining. With his direction and backing, the project stands ready to make considerable progress towards its objective of transforming Bitcoin mining. This announcement arrives as the significance of decentralization in the cryptocurrency environment grows increasingly apparent. In empowering individual miners and lessening the power concentration, Ocean stands to make Bitcoin mining safer and more accessible, amplifying overall network stability and resilience. Continuing his impactful presence in the cryptocurrency sphere, Jack Dorsey's investment in Ocean solidifies his integration in and dedication to innovating and maximizing the possibilities of blockchain technology. All eyes are set to observe the strides Ocean will make under Dorsey's leadership, influencing the future of Bitcoin mining. In a recent shocking development, Tomya, a popular crypto exchange and sponsor of Hull City, finds itself at the center of a fraud scandal in Turkey. The situation escalated when the owner of Tomya was detained by authorities for allegedly participating in fraudulent activities, the extent of which is currently under investigation. This controversy coincides with the Turkish government's preparation to introduce new legislation regarding cryptocurrencies, which has amplified the scrutiny on Tomya and other crypto exchanges operating in the country. The consequences of this new legislation could significantly impact Tomya's operations as well as the entire digital currency industry in Turkey. The scandal has also triggered concerns in the world of football, as Hull City's sponsorship deal with Tomya now stands in the balance. This puts into question the relationship between sports and the crypto industry, and demands a closer look at due diligence processes. The implications of this scandal are still unfolding, and the impact it will have on future cryptocurrency regulation in Turkey remains to be seen. As we continue to closely monitor this case, we promise to keep you updated with the latest developments in Tomya news. Binance, the cryptocurrency exchange, is facing intense regulatory challenges in different parts of the world. In the U.S., it recently reached a $4.3 billion settlement with the Department of Justice over violations of anti-money laundering and sanctions laws. This legal issue has created obstacles for its launch in Thailand, adding to the scrutiny it already faces there. Further intensifying this scrutiny are allegations linking a Binance compliance officer to FTX, Gemini, and Jeffrey Epstein. In tandem with these developments, Binance is also under the radar in the Philippines, where the securities regulator warns that the platform is operating without a license and is considering blocking access to it. In response to these regulatory pressures, Binance has discontinued support for its BUSD stablecoin, converting remaining balances to FDUSD. Its latest challenge involves a $1 billion lawsuit against Cristiano Ronaldo, who is accused of causing financial losses through his endorsements related to the sale of unregistered securities on Binance's platform. Despite the turbulences, Binance CEO Richard Teng seeks to reassure stakeholders that the core executive team remains unshaken. Meanwhile, Binance.US has taken preemptive measures by removing CZ as chairman of the board of directors following his guilty plea. Wrapping up the series of events, Binance has complied with the imposed $4.3 billion fine for violating U.S. financial regulations. As it navigates the ongoing challenges, Binance.US is addressing international exchange problems, and alternative platforms are being highlighted in the Philippines. The SEC continues its investigation of Binance for fraudulent activities, while the Philippines SEC issues warnings about Binance's unregulated operations, reminding traders about the importance of compliance and the potential penalties, including imprisonment for promoters. In the latest news from Coinbase, the price of Bitcoin has surged significantly, presently trading over $37,000 in conjunction with the 55 simple moving average. This rise appears to be fostering a significant bullish trend line, suggesting potential further growth to $40,000. In other developments, Bybit, a leading crypto exchange, may encounter substantial problems as the U.S. Commodity Futures Trading Commission, CFTC, has initiated scrutiny due to an alert from Coinbase. If American investors opt to shift their funds to Coinbase, this could have serious implications for Bybit. The CFTC, following the alert from Coinbase, has sought user data associated with Bybit, leading to this increased regulatory focus. Coinciding with these events, a notable movement of funds in the crypto market has been seen, with crypto whales transferring over $443 million in Bitcoin and Ethereum in a single day. This impressive volume suggests large-scale market activity that could influence overall market sentiment. Coinbase's CEO has also recently expressed criticism of U.S. regulations on cryptocurrencies, likening it to a jump ball, articulating the ongoing regulatory hurdles and the call for clearer guidelines in the crypto industry. Meanwhile, ARK Invest has taken strategic action amid these market changes, selling off $5.3 million worth of Coinbase shares and investing in $1.2 million worth of Robinhood shares. This investment shift highlights the evolving dynamics and changing preferences of institutional investors in the crypto market. In an unexpected turn, Coinbase's request for feedback from the U.S. Securities and Exchange Commission (SEC) resulted in a lawsuit rather than constructive responses. This lawsuit showcases the convoluted regulatory landscape that companies like Coinbase must navigate in the cryptocurrency industry. This concludes today's update on the latest developments in Coinbase and the broader crypto market. Stay tuned for more updates from the ever-changing world of cryptocurrencies. In the latest update from FTX, a significant breakthrough has been achieved with court approval for the sale of cryptocurrency investment trusts. FTX has been officially sanctioned to sell an impressive $870 million in these assets to repay creditors. A noteworthy fraction of this figure is projected to originate from the Grayscale Bitcoin Trust, GBTC. This court endorsement stands as a remarkable stride in FTX's debt repayment efforts. Authorization has been given for the sale of $873 million worth of shares and holdings, not only from Grayscale Bitcoin Trust, but also other digital trusts. The authorization for FTX's disposal of such a substantial amount of assets, particularly from the Grayscale Bitcoin Trust, underscores the rising importance of digital currencies within conventional financial systems. It also demonstrates the faith and assurance placed in FTX's capability to manage these assets responsibly. This sale of Grayscale Bitcoin Trust shares, as well as other holdings, stands to benefit FTX in handling its liabilities, while simultaneously presenting a potential opportunity for investors to obtain digital assets via this platform. We look forward to observing the implications of this sale for FTX and the broader cryptocurrency marketplace. Keep an eye out for more updates from FTX, cryptocurrency news, along with other developments in the dynamic realm of digital finance. In the latest developments from zipmex, the Thai crypto exchange has proposed modifications to its restructuring plan for creditors. The revised proposal now aims to pay creditors 3.35 cents per dollar, a slight increase from the initial offer of 3 cents per dollar. This change is intended to mitigate the ongoing financial struggles of the exchange and provide some respite to its creditors. Additionally, zipmex has also proposed an alternative plan which offers a more generous repayment scheme of 30 cents per dollar, potentially providing significant relief to those it owes. As the company continues to assess and rectify its financial situation, we will continue to provide essential updates on any future changes. In recent Ethereum news, the surge in Ether's value is causing a stir in the network as validators are exiting, potentially to cash out their holdings. This development could impact the network's security as the rising Ether price leads validators to opt out of the system. Meanwhile, bearish sentiment has taken hold in the face of Ethereum's uncertain future. The cryptocurrency is confronted with various challenges and uncertainties that have led to downward pressure on Ethereum's price, thus making traders and investors cautious about its prospects. However, there are potential bright spots for Ethereum as a golden cross pattern seems to be forming. This could indicate a possible buy signal, leading to significant price increases as seen in historical instances. But it's essential to keep in mind that not all golden crosses result in an expected upwards movement. Experts are now observing the average directional index ADX to confirm the strength of this trend. If the ADX supports the golden cross, it may reinforce the forecast for a positive price reaction. Navigating through this complex market, Ethereum's current developments put forth both challenges and opportunities for investors and traders. Monitoring these evolving factors and keeping updated on Ethereum's latest news will be vital to understanding its wider ecosystem. In recent IOTA news, exciting developments have led to a significant price surge of over 40%. This increase is primarily due to a strategic pivot towards the Middle Eastern and RWA, regulated work accounts market, coupled with the registration of their ecosystem foundation in Abu Dhabi, the capital of the United Arab Emirates. This move has greatly boosted IOTA's market performance. In accordance with these expansion plans, IOTA plans to launch a $100 million foundation in Abu Dhabi. This foundation will serve as a crucial hub for its operations in the region, providing a strong base for their ambitious growth objectives. The announcement of these strategic plans in Abu Dhabi has generated substantial attention and investor interest, subsequently driving an impressive surge in IOTA's price. Overall, the cryptocurrency community has enthusiastically welcomed IOTA's recent initiatives, fostering great optimism for its future. Stay tuned for more exciting updates in the IOTA news and the broader cryptocurrency world. In the latest news from Solana, there are several developments and updates stirring interest in the crypto world. Recently, Solana's price saw a significant surge of 9%, a growth that can be attributed to the rising anticipation around Bitcoin ETF approvals that's capturing the attention of crypto enthusiasts. Speculation about Solana potentially hitting a $100 mark casts an exciting future for this trending altcoin, making investors and traders keenly monitor its climb. Turning attention to XRP, a bearish flag detected in its price chart suggests a possible decrease in its market value. Given this, investors and traders are advised to stay vigilant and track any further cues to predict XRP's trajectory. Beyond the fluctuating numbers, the broader altcoin market has been abuzz with discussions about their future prospects. As digital assets inch towards mainstream popularity, there's an increased focus on the analysis of an array of altcoins and their potential growth opportunities. In another exciting development for Solana traders, the eTuk token presale is causing a buzz. The pre-sale presents an early entry opportunity for traders to partake in this new token, potentially reaping benefits from its future success. This concludes the latest updates from Solana. Stay connected for further reports on happenings within the dynamic world of cryptocurrencies and blockchain technology. In the latest development in the blockchain arena, messaging platform Wormhole has successfully raised a remarkable $225 million in seed funding, achieving a valuation of $2.5 billion. This impressive fundraising comes on the heels of Wormhole's final separation from Jump Crypto, previously part of Jump Trading. This healthy investment has positioned Wormhole to enhance and develop its cross-chain capabilities as part of its larger expansion plan. The company has also initiated Wormhole Labs, demonstrating its strong commitment to broadening its offerings in the blockchain sector. With this substantial financial backing, Wormhole is now well-positioned to make a significant imprint in the crypto world. In recent Paxos updates, the leading blockchain platform has made a significant breakthrough in the United Arab Emirates (UAE) cryptocurrency industry by acquiring preliminary approval from the Abu Dhabi Global Market (ADGM) to offer its crypto services. This regulatory approval from the Financial Services Regulatory Authority (FSRA) of Abu Dhabi authorizes Paxos to issue stablecoins, a type of cryptocurrency tied to real-world assets offering stability and mitigating price volatility. Moreover, they're permitted to offer cryptocurrency brokerage and custodial services within the region, marking a significant advancement for Paxos's expansion of stablecoin operations. This approval comes at a time when the UAE is taking innovative strides in the blockchain and cryptocurrency space, furthering its economic diversification efforts and maintaining its position at the forefront of financial technology advancements. Owing to its strong technology and regulatory compliance, Paxos is ready to help individuals and businesses in the UAE navigate cryptocurrencies, offering reliable and secure transaction and investment methods in digital assets. However, it is crucial to consider that while preliminary approval has been granted, the final authorization process is still underway. Paxos will need to fulfill more regulatory obligations to fully roll out their cryptocurrency services in the UAE. Despite this, the potential of Paxos becoming a crucial factor in developing Abu Dhabi's digital asset ecosystem shows promise. Therefore, individuals and businesses in the UAE should closely follow Paxos's progress and its innovative contribution to the cryptocurrency industry. The Securities and Exchange Commission (SEC) has recently postponed its decision on the applications from Franklin Templeton and Hashdex for a spot Bitcoin exchange-traded fund (ETF). These firms hope for approval to launch their spot Bitcoin ETFs, offering investors access to the crypto market without directly owning Bitcoin. Despite this delay, experts anticipate that the SEC may approve these ETFs in January 2024. All 12 applications are expected to be queued for approval, hinting at a potential change in the SEC's viewpoint on cryptocurrency investment schemes and opening new doors for investors in the years ahead. Simultaneously, the SEC is entangled in a legal dispute with Terraform Labs, the organization operating the Terra blockchain network. The ongoing case has revealed Jump Crypto, a leading cryptocurrency trading firm's involvement in Terraform Labs' complications. The SEC's investigation of Terra's activities has generated questions about regulatory compliance within the cryptocurrency industry and its possible impact on other blockchain projects. As the SEC continues dealing with the rapidly changing cryptocurrency field, market participants eagerly await further updates and regulations. The endorsement of spot ETFs would significantly affect the broader crypto market and potentially attract an influx of institutional investors interested in acquiring a regulatory framework for digital assets. Keep an eye out for more updates on these developments as they progress. The Treasury Department accuses sinbad.io of being a nexus for laundering activities, facilitating the Lazarus Group, a notorious North Korean hacker organization, to process millions of dollars worth of stolen virtual currency. Consequently, the FBI, alongside Netherlands and Finland authorities, seized the Sinbad.io website. This action forms part of a broader campaign to thwart cybercrime and money laundering activities associated with North Korea. The Lazarus Group, implicated in high-profile cyber attacks, such as the infamous 2014 Sony Pictures hack, has been a major concern for the U.S. Known to use intricate methods to steal and launder funds on behalf of North Korea, the group's activities have heightened the U.S. Treasury's focus on cryptocurrency platforms and services used by global criminal organizations. In particular, sinbad.io, a cryptocurrency mixer, is alleged to have enabled North Korean hackers to launder an estimated $850 million. Sanctions on sinbad.io are intended to disrupt illicit financial networks and hinder North Korea from financing its illegal activities, including its nuclear weapons program. However, sinbad.io has yet to respond publicly to the accusations or comment on the sanctions. As more evidence is collected and the investigation into sinbad.io's alleged connection with the Lazarus Group deepens, developments in the case are expected in the coming weeks. The U.S. government's actions towards sinbad.io underscore the growing need to regulate the cryptocurrency sector and target money laundering within it as part of an ongoing effort to counteract North Korean cybercrime. In U.S. Treasury news, there has been significant development in the cryptocurrency sector. Increased authority to sanction crypto firms is being called for by the U.S. Deputy Treasury Secretary in response to recent cases involving Binance and Sinbad. The Deputy Treasury Secretary underscores that these cases underline the potential dangers linked to certain cryptocurrency platforms and argue for strict regulation. Cryptocurrency firms are clearly facing more scrutiny as authorities strive to protect the financial system's stability and security. Furthermore, stablecoins, a type of cryptocurrency that aims to keep a steady value by tying themselves to a reserve asset like the US dollar, have come under close watch. A top U.S. Treasury official has issued a warning about the potential misuse of stablecoins worldwide, particularly Tether, indicating the potential risks unstable stablecoins may pose to the financial system's overall stability. The official's warning does not only highlight potential threats to financial stability, but also points toward the risks of terrorist exploitation of stablecoins like Tether for illicit purposes. The need for tighter regulations to prevent such misuse is becoming more apparent, as the anonymity and ease of use associated with specific cryptocurrencies could be exploited by malevolent factions. Overall, regulatory bodies are paying increasing attention to the digital currency space. As the impact of cryptocurrencies escalates, it's clear that authorities are keen to implement safeguards to protect against financial risks and misuse. Thank you for tuning in to this episode on cryptocurrency, where we explored the exciting world of digital currencies and their implications for the future of finance. Stay tuned for our next episode.